If you're one of the millions of people who look at your bank account at the end of the month and just wonder, where did all my money go? Let me tell you, you are not imagining it. You're being taxed far, far more often than you think. Most of us, we focus on that one big number that comes off our payslip income tax, and we just assume, okay, that's the main story. But the sources we've looked at for this deep dive, they reveal this. Well, this deeply layered system where the same money gets hit again and again and again. Welcome to the deep dive. Our mission today is to cut through all that noise and expose the dozens of charges and taxes that are quietly built into, well, everything.
That really is the core insight,
Yeah.
What we're going to show you is that most people just fundamentally underestimate their true tax burden. And it's because so much of it is buried inside the prices of things. The whole system is designed to recycle the same money back to the government over and over. Okay, so let's unpack this. Let's follow your money's journey.
Right, let's start with the obvious stuff, the taxes we can actually see. You earn money, and boom, that's layer one, income tax. Then you've got things like Social Security or national insurance, which, a lot of people think of separately, but it's still a chunk taken directly from your earnings.
And that's the money you've earned. You've paid the first tax on it. And this is where the dynamic really shifts. This is where it gets interesting. So you've paid that first tax, the net amount is in your bank account, and you're ready to spend it. The second you use that already taxed money, another huge tax is waiting. Value-added tax. VAT.
Ah, VAT. It feels like it's on everything.
It pretty much is. It's a percentage of the total value, and it's wrapped into the cost of, well, almost everything. Clothes, electronics, even the pizza you ordered last night. So you earned the money, you paid income tax on it, and now you are taxed again just for using the money you have left.
So the government gets two bites at the apple right out of the gate. Once when you earn, once when you spend. But the sources we looked at, they highlight that it goes way beyond just a simple VAT. They talk about this concept of tax on tax.
Absolutely. And this is vital to understanding the hidden layers. VAT is a percentage, right? But many things are hit with a fixed tax first before the VAT is even calculated. We call these duties.
Okay, can you give us an example of that?
The clearest one, and probably the most painful, is fuel for your car. That gasoline is loaded with a really significant fixed duty for every single gallon. It's a set charge. And that's before VAT is even in the picture.
Wait, so let me get this straight. There's the price of the fuel, then the government adds a fixed duty on top, and then the percentage-based VAT is applied to that new higher number.
Precisely. You are paying a tax on the product, and then you're paying a percentage tax, the VAT, on the product plus the first tax. It just dramatically inflates the final cost. It's an escalating cost hidden right there at the pump.
And once you see that, you start realizing that these quiet, specific charges must be tucked into bills everywhere.
They are. They really are. These are the charges most people just skim right past. For example, your insurance premium. It often comes with an insurance premium tax quietly added on top.
Another separate tax.
A totally separate tax. Or if you book a plane ticket, there's an air passenger duty factored into the cost, hidden in the fine print. Your energy bills have specific green taxes woven into them. Same for alcohol, tobacco. The list goes on.
And the key thing here, I suppose, is that businesses don't just eat these costs.
Not at all. They have to collect them. So they simply build every single one of those duties and taxes into their final prices, which means you, the consumer, you are the final payer for every single layer.
Okay, so we've established the first two phases. You pay when you earn, and you pay multiple times when you spend. But what if you manage to save some of that money? What happens if you try to be prudent and save or invest it?
That is where the cycle of retaxation really starts to shock people. Even after you've earned it, paid income tax on it, and avoided spending it, the government is still structured to take another slice.
How so?
Well, take savings. You put your money in a savings account, it earns interest. That interest is usually classed as income. And so it can be taxed. You're paying tax on money that was generated by money you already paid tax on.
And what if you invest it, say, in stocks?
Then you run into capital gains tax. When your investments grow in value, the gain is a taxable event when you sell. So income tax hits your salary, but capital gains tax hits the growth from that salary. The government is essentially taxing the success you had with your already taxed money.
So you pay when you earn, pay when you spend, pay when you save, pay when you invest. Is that the end of it?
There's one final one, the one that targets everything you've managed to build up, inheritance tax. Even passing on what's left of your life's earnings when you die can trigger a massive tax bill for your family. When you look at the whole process, it's staggering. It's the same money being taxed repeatedly just because you used it in a different way. Earn, spend, save, grow, and then pass on. There's a tax waiting at every step.
Which brings us to the big question. Why? Why is the system so complicated? Why not just one or two big, clear taxes?
The answer our sources point to is, well, it's about politics, really. It's just easier for a government to collect money when the burden is spread across dozens of small, often hidden charges.
It makes it harder to see the total amount you're paying.
Exactly. Imagine the psychological impact. What if on January 1st you got a single bill for the year, a single overwhelming number representing your total tax contribution income, VAT, fuel duty, all of it? The sources suggest there would be outrage, immediate and severe.
So the complexity isn't an accident. It's a feature.
It breaks the enormous total into smaller, more politically tolerable slices. In a way, the lack of transparency is what makes the system work so smoothly.
Okay, so if recognizing these layers is the first step, what can you actually do about it? The sources mention some straightforward, actionable steps.
The most immediate one is to use all the legal tax allowances available to you. These are specific opportunities the government gives you to shield some of your income. Personal tax-free thresholds, savings allowances, that sort of thing.
And things like pensions.
Pensions and tax-free savings accounts are crucial. They're specifically designed to break the cycle we just described. They either protect your income from tax on the way in, or they protect the growth from being taxed later. They're the most effective legal way to interrupt the system.
And what's the one foundational thing everyone needs to do?
Meticulous record keeping. It's so important. So many people, especially if they're self-employed or have a side business, they overpay tax simply because they can't prove their expenses. If you can't prove your costs, you end up paying tax on your gross income, which just compounds the problem. Documentation is everything.
We spent this deep dive talking about a system that's built on complexity, but it raises a really important question. Does it have to be this way?
And that's where looking at a historical alternative is so powerful. The early Islamic economic system offers a really stark contrast. Its guiding principles were simplicity and transparency. It just rejected the idea of taxing the same money over and over.
So how did that work in practice?
Well, for one, basic income from a person's work often wasn't taxed at all. The focus was on accumulated wealth, money that was held beyond your immediate needs.
A completely different philosophy.
A total different philosophy. Wealth was taxed just once a year through a single, openly defined contribution. And there was no equivalent of VAT, no consumption tax, no hidden environmental charges, no duties built into prices. The whole idea was to let people grow their capital without this constant fear of retaxation.
When you contrast that with foundational texts that prohibit unjust taxes or warn against consuming wealth unjustly, what stands out is that huge gap, the gap between simplicity and complexity, hidden and transparent. So, to summarize our deep dive for you, you can now see the system not as a single tax, but as this multi-layered structure designed to take from every possible angle. That feeling you have of constantly being squeezed, it's not in your head. It's the very real result of a system that lacks transparency.
And that leaves you with a final thought to mull over. If economic systems built on simplicity and transparency are historically possible, what political or economic incentive keeps us locked into a system that is deliberately designed for complexity and the repeated taxation of the very same money today?
Explore those tax-free accounts of allowances you might be overlooking. It's the first step to legally safeguarding your money. We'll catch you on the next Deep Dive.